Hello everybody. Today I just want to show you this is more like a continuation of uh, the part one that I did on the Fibonacci lines, but this time around it's a different platform. Yeah, I'm on TradingView. So let's go straight to the point. So in this video, I want to show you a situation where you see that the market structure is having like an impulse leg, which is was formed from a breakout of a contraction or a breakout from a very long consolidation, or just a key level in the market, which we can call a support area or a resistance area, which was holding the market for a very long time. Now there was a breakout of the structure. And then now you see that there is an impulse leg, but you can't just assume it's an uptrend. You can't just buy on a rally. You have to wait for a pullback. But for you to know the precise point for you to enter your buys, assuming that is an uptrend, you need the Fibonacci, or say you need some tools. Let me show you what I'm talking about. First of all, let's make an example. So if you can look closely, let's do like this. If you can look closely, you'll find that this was a consolidation area. The market from this point, it was going up, and then when the market reached this zone, it was just consolidating in one area. It was consolidating in one area, and then what happened next was there was a breakout. Some of you who are trading the trendline strategy will find that maybe you entered a buy at this bottom, and then you are holding your trades, you are in profit. But assuming that you saw this very late or you're not sure, and then you see now this is a clear impulse move. This is a 1 hour chart, by the way. And then you want to enter a retracement or a pullback. So this is what we do. You take your fib, and then from the lowest point, which is this week of the candle, if you can push up to this week. As you can see, this is my Fibonacci. Now, I took from the lowest point to the highest point. And then what happened? I was expecting a retracement. According to me, I'm expecting a retracement at least at 61.8. And then worst case scenario, I can lead it to go to 78.6. But my golden zone will be 61.8. When the market retraces up to this point, I will enter my buys in continuation. But if the market comes to clear my 100% zone going down, I know that there's going to be a change in direction. The market is no longer buying because the market has broken all the structures, the previous structures that was making the higher highs and what. Now the market is trying to make a change in direction. The market is trying to go down. But if the market is failing to break the 61.8 and start going up, if the market can fail to break this level and start going up, I will make my first target to be where I started my week, which is the 0%. That will be my first target. And then my second target will be just above. That can be drawn by taking the measurement from this low point to this high point, which in this case, my sentimental swing will be exactly the same the same movement that caused this impulse move. But just to avoid confusion, I'm gonna slowly show you this one a perfect zone. This one rejected at 50%, which is still fine, 50%. But for me, I'll go with 61.8. Given the allowance, this blue section, this is where my entries will be. So let me give you examples. I can see good examples there, and then let me give you what. Okay, good, good, good. For example, you are having this box right here. This whole box is a consolidation area. And then it happened that at this low, the market pushed to go up to this high. That's what the market did. And then what happened? The market went as low as 61.8 at least. And then at this point, it formed one of the candlestick formation that I like. You see this candlestick formation? Candle went down, formed a low, another candle. Exactly at this point, the market didn't try to go down. Exactly at this point, the market went up, which formed a candlestick formation that is giving you confirmation that now we are going up. But anyway, that's a topic for another day. For now, what you want to know is that there has been a consolidation for a very long time. And then now we have an impulse which broke these, because this has been a consolidation. Then now the market broke from this consolidation, it went up. And now as a trader, you want to enter a buy because you can see after this correction, now the market want to go up, but you don't know when to enter. Now you take your fib level from the lowest to the highest, and then the fib level shows you that at 61.80 expect to buy. So at this point, in fact, this whole zone for me, I like the 61.8, but from this zone from 50 to 78.6, this whole zone, it's a zone where you should look for confirmation. Like for me, you can see, I told you that this candlesticks is a confirmation candlesticks for me that the trend is changing. Now I should enter the buy, which means after this impulse candle, that the bullish candle, I'll just wait. I'll just scale down to the lower time frame, and then I will have my entry somewhere there. And then, like I said, my first target is the 0%. This one, where I started my fee. So this is the first target. And then my second target will be like this one. Half of this movement. Like what I mean is, for example, let's say this is where we started, right? And then this way, you know, what I'm gonna do, I'm just gonna take, for example, let's say if half is 50%, right? This 50%, I'm just gonna take this 50%, put it somewhere there. And then what I'm gonna do, I'm gonna say after the market moves from this point up to this point, now there is a retracement here. This is now my entry. My first target is here. Now my second target, I will believe that the market will break this point, and then somewhere here I will get my take profit through. Which you can see, the market never hit your stop loss because your stop loss will be just below the 61.8. Depending on your risk, you can put your stop loss just below on this gray zone again, but depending on your risk and whatever, it will just be below the 61.8. So as you can see, my 50% target, I have the first target, this one, second target, this one. Market try to retrace, go down, challenge you to take stop out or anything, but at the end of the day, the market hit your take profit. So you can see, this is your, for example, this will be my trade entry. See, in fact, Look at how much this is. 5 to 15. This will be my kind of setup. I entered 61.8, then the risk, the stop loss just below. Even if you can increase it just to 71.6, somewhere there, still fine. And then the take profit number one will be at this point where the move started, the reversal started. And then the second take profit will be 50% of this. Then you can still hold to go up, but I don't do that because as you can see, the market retraced down. So if you don't understand this, comment below, tell me to clarify it more. I'll try my best to clarify it more and more, but that's what's up. Yeah, you can see another thing here. There is a head and shoulder. This is a different topic, but anyway, I wanted to show you something about anyway, like I'm saying, but anyway. Let's see, my brother. Let's see, my brother. You see what is happening? From where the impulse started, boom, to the highest, 61.8, the market retraced, continued. Look what happened. The market went up forever. You see? The market went up like forever. That's how you can spot your, this one, I don't know if I did it before or what, but from this point also, boom, that point, this one is of the 50% one. Okay, stuff fine. You can even try this one. The impulse started at this low, boom, your highest there. Then what happened? Boom, up to this point, the market retraced. When the market is retracing like this, as a trader, you are looking where you can enter. Now you see your 61.80. I told you this whole zone. If it goes below to this point now, there is no entry. That's another pattern. But for you, it hit the 61.8. At this point, you look for, you scale down to your lower time frame to look for candlesticks confirmations. You see, you find maybe a double bottom somewhere there, you enter. Or maybe if you're trading SMC, you look for your order block, or you look for whatever inefficiency in price or anything, or if you're a supply and demand trader, whatever you look for, but the fee will have already told you that now the retracement, expect the retracement at this point. Now you enter your buyers, boom, first take profit at the first where you started your reversal. Second take profit, 50% of the move, which is somewhere here. As you can see, the market went very, very hard. So me, this will be my kind of setup. I'll enter here. Then I'll put my stop loss just below there. And then, like I said, my take profit will be somewhere. The first take profit here, second take profit here. See? That is how you use your feed to help you to find a pullback where you can enter when you have already missed that impulse move in whatever setup that you are trading. I hope you guys enjoyed this video, and I hope you the feed issue is clarified. And tell me in the comment section if you need me to talk more about the premium and discount in combination with the feed retracement tool. I will definitely do that. Other than that, see you on the next video. Please do subscribe, do like, do share, do comment to motivate me to do more videos like this. So